Advocate Broadcasting Network.
Welcome to Market Movers. I am Sonny Onaji Effiong, stepping in for Osai Ilume, who is on an assignment. In recent months, the Nigerian banking sector has faced substantial pressure to bolster its capital base. As of the latest data, the banking sector's non-performing loan ratio stands at 5.3%, a clear indicator of a pressing need for increased capital adequacy. Meanwhile, recent statistics shows that small businesses account for about 96% of all businesses in Nigeria, emphasizing the importance of their access to credit and financial stability. More so, this need for recapitalization arises amidst challenging economic conditions, with the Central Bank of Nigeria pushing for stronger capital buffers to ensure stability and growth. In response to this development, several major Nigerian banks have announced recapitalization plans. For example, Zenith Bank has launched a rights issue worth approximately 100 billion naira, while Access Bank is pursuing a public offering aiming to raise around 150 billion naira. These significant capital raises underscore the sector's effort to strengthen their financial footing. With over 37 million micro, small, and medium-sized enterprises, MSMEs, contributing nearly 48% to Nigeria's GDP. The health of our banking sector is crucial because improved capital bases can significantly enhance banks' lending capacities, thereby providing much-needed support to these vital economic players. Joining me on the show this afternoon is Mr. Stephen Wanchuku, our financial market analyst, to shed light on the advantages, risk, and long-term impacts of right issues versus public offerings. Stay tuned as we dive deep into the nuances of these financial strategies and their potential to reshape the future of Nigeria's economy. I'll be back after this break. Stay with us.
In a world of overwhelming voices where everyone has different opinion on different issues, it is important that we bring the core issue to the fore. Join me, Nancy Banigo, on Softline as we lend our voices to inform and influence your thoughts and actions. This is not just mere talk, it is an evocative program that touches the core of our existence.
No matter wetin I see, enough fit make mouth heavy to talk am. That's now why people dey talk.
You know wetin dey worry you, but you no go fit take help yourself.
In this kind of situation now, what if they really no talk to una? Wetin be the way forward?
They go bury our chairman on Thursday. We go remain here.
Make we talk good where we dey see good, and where we know say we no dey see good, make we also dey talk am.
No woman, no mother deserve to know the grave of his child.
The bank manager, the bank executive, they are the one the government should first pay.
People They Talk, the show on Monday to Friday by 5 p.m. on top ADBN TV.
hour of your daily dose of news from around the world.
Whether it's a diplomatic breakthrough, a humanitarian crisis, or a scientific discovery, Global Digest gives you a deeper understanding of the world around you. Join me, Alma Marcus. Let's stay ahead of the curve with conversations that are shaping our planet at 11 a.m. on DSTV, channel 258, and on Star Times, channel 140. Global Digest, your window to the world's current affairs, only on Advocate Broadcasting Network.
It is Groovy Mono, aka the Steve Prince.
Yo, what's up? It's Big Shags. I'm in London.
Hey guys, I'm Princess Jekoko. My name is Mutale Mwanza, the Queen of Zambian Media.
My name is Grand Prince Aita. Hi guys, my name is Baj Adebule. I'm an actor and a filmer.
Hello guys, I'm Falagade Banks.
My name is Kelechi Amadiobi, photographer, storyteller.
My name is Nanrade Dura, I'm an actor.
My name is Chidi Mokeme.
Hi, my name is Uche Uba.
It's Touré season.
I'm Miss Thames.
Hi ladies and gentlemen, boys and girls, mamas and papas, I am Jimmy. You can call me the Entertainer.
My name is Esio Dometa. I am an actor and a film producer.
My name is Sobi Kubala.
Hi. My name is Julius the Genius. I would give a shout out to ADBN.
Big shout out to ADBN TV.
You're watching ADBN.
And you are watching.
Keep watching ADBN TV.
And this is ADBN TV.
And this is a shout out to ADBN TV. Keep watching, don't switch the dial.
Shout out to ADBN. Keep watching, love.
And you are watching ADBN TV.
Shout out to ADBN TV.
I've got one thing for you. Make sure you keep watching ADBN TV.
And shout out
to ADBN TV.
Shout out to ADBN TV. Don't touch that dial.
And you're watching
ADBN TV. Keep watching ADBN TV.
And I'm shouting out to ADBN TV.
You're watching ADBN TV.
Keep watching ADBN TV. This is where to be. And you're watching ADBN.
And shout out to
ADBN TV.
And shout out to ADBN TV. Keep watching.
And you're watching ADBN TV.
Keep watching ADBN TV.
Right now you are checking out ADBN TV. One time.
ADBN. Keep watching. I love you and kisses.
Keep watching ADBN.
And a special shout out to ADBN. Keep doing what you're doing, guys.
Please don't touch that dial.
Stay groovy.
Mwah.
Hey, Bobby.
Ha!
Thank you for staying with us on Market Movers. I have Mr. Steve Nwachukwu to look at the issues as it relates to rights issues versus public offers. I don't know if Steve is already up. Steve, if you can hear me, welcome to Market Movers. Can you hear me? All right. Thank you. That's Mr. Steve Nwachukwu, our financial market analyst. Good to have you once again this afternoon. All right, let's delve into the issues. Thank you. Let's delve into the issues. Steve, you are one person who is passionate about our economy, and you are constantly following up activities as it relates to the economy. Recently, precisely on the 28th of March, the Central Bank of Nigeria did issue a circular ordering banks to recapitalize. According to their capacity and their tiers. The minimum amount there is 10 billion naira for non-interest banks, from 500 billion to 10 billion. That's for non-interest banks. And this order, again, the Central Bank of Nigeria is also helping banks and suggesting means that they can, source this fund to recapitalize. One of the means is for them to inject fresh capital, either through private placement or right issue or offer for subscription. They are also suggesting that the banks can also consider merger and acquisition, or also to upgrade or downgrade their authorization license. But one of the means that we have seen the banks embracing has to do with right issues and offer. Now, can you help us differentiate between right issue and public offering?
Okay, thank you so much. I think for a better understanding of the difference between the right issue and public offer, perhaps let's take a historic or a brief background of what it means to play within the capital markets. There are a couple of different instruments available in the market. Then down to the shares, which is our main focus. You have what you call a raising fund. Have in mind the capital market is a place where industries and businesses come to raise capital to operate. The Nigerian Stock Exchange, the NGX, serves as medium where existing shareholders can buy more shares or exit from the shares they have in their possession already. So when you hear public offer or when you hear IPO or you hear right issues, these are mediums or ways of raising capital for the existing share or existing companies. So when any issue around the recapitalization, I'm getting to hear myself back. I don't know if it's not echoing back there.
No, we can hear you clearly.
Okay. So the issues around recapitalization, there are models, there are ways to raise funds. Just like you mentioned, there is private placement, there is IPO, there is PO, then there is right issue. These are all different cadres of raising funds for existing companies quoted at the floor of Nigerian Stock Exchange. So now, if we can now get down to the issue of differentiating between the public offer, which is the PO, and the right issue. First, let's understand what IPO is. IPO means initial public offer. PO, which is the public offer, means public offer. You use the word initial public offer when you are coming to the market to access funds for the first time. That is why the word initial public offer is there. So PO means that you already quoted, you already playing in the market, it's just like you needed additional fund. So that's why it's called public offer. Now, private placement is also another medium of raising funds for quoted companies or even new companies. Now, private placement, as the word also implies, is a selected number of people, captains of industry, high network individuals, and corporate organizations you have focused to raise your funds from. You are not looking at the word public now. It's private people you are meeting to raise. If it's 1 billion, if it's 10 billion, if it's 100 billion, you have targeted this very cadre of investors to raise funds from. So that is why it's called private placement. Then down to the right issue. As the word also implies, it's a right of the existing shareholder to participate in the issue shares of the company. This is a medium also to raise funds, but you are targeting the existing shareholders, offering, depending the volume or depending the value of the amount you are looking at, a certain volume of shares or in a certain ratio to raise the fund. So the right issue those who are already shareholders. Have in mind that public offer can also be, you must have bought, for instance, when they did the recapitalization or the banking sector recapitalization of 2004, 2005.
Yes.
Those who bought in 2004, 2005 can also come back now and buy. But the difference here now is the right issue here is only for those who already own shares
yes.
in the company. So there are certain ratios that are used, some use 1 to 2, some use 1 to 5, depending the amount of money they are looking at to raise. So they use the ratio to allocate a certain volume of units of shares to all the existing shareholders to take up their rights.
Thank you, Steve, for providing that clarity regarding the differences, and I think it's quite clear. Now let's look at it. Like we stated in our background statement, the banks, we gave some examples of some of the banks. Some of them are adopting right issue and others public offering. Which do you think is the best?
Well, none of them, like I said, they're all medium. They're all medium of raising funds. So someone convenient for the institutions, they go for it. Most of right issue is the most convenient.
Okay.
Have in mind that you want money. And the best people you can ask money for is the existing shareholders. The chairmen of those boards, those who constitute those very institutions, or those who actually own those business, they are the that can reinvest in their own company. So that's why most often it's more convenient to issue a right issue than going to the entire public to start asking, selling your product afresh to the public. But to the existing shareholders, it's already a known business they are. They know how more profitable it is. So to them, it's the best option to actually give a right issue to existing shareholders to take up those rights so that they can raise those monies and capitals and funds they needed to expand their business lines. So, like I said, it's the one that is more convenient. The board can also weigh that the existing shareholder does not have a good number, a good reasonable money, so that they cannot decide to go public. Or perhaps they have a kind of understanding that yes, a couple of individuals who are interested in investing in us, who are not existing shareholders, and they cannot get it except to public offer. So that's why most often you also see something go public to raise funds, to bring in more shareholders or expand the existing structure, existing shareholding structure. So, like I said, it's more any of the one that is more convenient for the board that they will actually adopt. But most often, right issue is the best way of raising funds because
having established that most of them adopt is the most popular, right issue is the most popular, how does recapitalization through right issue affect the lending capacity of banks compared to public offering?
Well, of course, like I said earlier, right issue is one of those major. They are all receiving money, they are all ways of receiving money. So whether you go public offer or you do right issue, they are all forms of taking money from other sectors or idle money to reinvest in a particular sector. So most of the capital market or the exercise of the recapitalization of the commercial banks is meant to expand the capacity of the bank, improve their liquidity level, and perhaps give them much larger functions, give them opportunity to handle major functions in the society, and also to expand the existing credit to GDP ratio that is within 14%. So they needed to expand it to lend to the retail sector, to lend to more entrepreneurs. So these are opportunities. So definitely take away funds from other sectors and perhaps concentrate this money in the hands of different measures. So whether public offer or whether right issues, they are all methods of taking money from the certain to a particular sector to expand their business line, be it the brewery sector, or be it the banking sector, or be it the industrial sector or consumer goods, depending who or which company is floating such offer.
All right. Another question that I'd like to bring your way is the fact that it has been identified that the MSME, occupy a larger chunk of businesses in our country to about 96%. They are employing the region of about 60 to 70% of individuals in our country. What do you think, as it stands at the moment, the banking recapitalization, do you think it can improve access to credit for small businesses in Nigeria?
Yes, this is the same fears that most of us have shared, in the sense that the quantum of volume of money that is required to finance and to be concentrated in the hands of the banking sector or the financial sector in the couple of months, close to about 4.4, 4.3 trillion that is expected into this sector. So the adverse effect or the ripple effect, what it may lead to, yet we believe and we fear the fears that perhaps it may lead to liquidity crunch within the informal sector, which where most of these very SMEs actually operate, because most of the SMEs starts within the formal sector. Take for instance, a good number of these SMEs can hardly meet the standard set by these very official commercial banks when they approach them to finance their projects. For instance, you have a proposal, you walk down to your bank, and perhaps you should have those required banks to access financial to business. You resort to either your cousin, either your friend, or your community head, or community union, or your uncle. Most often, these are the remedies which are the alternate financial sector or financial credit system. When I give the word, they are the alternate. I actually mean that when you meet your uncle, you are not meeting a bank. You are not meeting any of the conventional bank.
Yes.
So when he lends out 1 million to you to fund your project, it's an alternate financial credit system. But most often they are informal routes. When you meet your friend, please and if a million, need 2 million, or I need them to finance it the next 6 months, in the next 1 year, I will be able to buy. All of measures or alternate credit system facilities existing. So when this 4 trillion will be channeled to the commercial banks or channeled through this recapitalization exercise, is going to dry up all these funds, because most often those needs of your uncle, your friend, your family members are most often idle funds. When these banks will close like they have started, a good number of them is already in the market as we speak.
Yes.
It's in the market, Access Bank already in the market, looking for hundreds and billions of naira. People that will participate in this very exercise will be this your uncles, my uncle, the friends we have, and the rest of them. And most of these idle funds to this very exercise. And depriving those entrepreneurs, SMEs, those free funds they actually walk down and knock on the door of your uncle, your friend, and actually get this very fund. So that is the fear, the liquidity crunch that is looming. Yes, it's evident that will be possible liquidity crunch if this exercise are done and it's 100 or 80% locally funded, except we have, like we are witnessing some FDIs, capital importation in respect to these various exercises conducted by the banks. If 80% of these funds is sourced locally, it will totally cause a liquidity crunch within the Thank you.
All right, let me take you on this particular one on a broader perspective. The central bank governor, Olayemi Cardoso, did say that the essence of the recapitalization is premised on the fact that Nigeria is ambitious to raise the GDP to $1 trillion economy. So that's what is influencing or driving the motive for the recapitalization. Do you see any potential economic benefit we can derive as a nation choosing right issue over a public offering for the banking recapitalization?
Like I said earlier, there's actually no difference between a right issue and public offer. The only thing is this is to the public and this is the right issue. Also becomes of issue beneficiaries, possibly are also foreigners, because I also know a couple of banking institutions that are foreigners and that are investors abroad who have interest in most of these commercial banks. So whether it's through the right issue or through the public offer, it is the same business eco environment you are sourcing the money from. So now the question around the 1 trillion ambition of the federal government is not bad to the ambitious economy of Nigeria to a GDP of 1 trillion. But how do you relate it to the recapitalization? It's totally far from that. In the sense that the recapitalization of the commercial bank is overdue.
Okay.
If you consider that time it was exercised about 19 or 18 years ago, and it's overdue, the fact that the valuation of Naira have eroded the existing capital base of the commercial bank. Even as we speak now, a good number of these, in fact, okay, maybe the 200 billion recapitalization cadre, which is the national banking license.
Yes.
It is still lower than what it were in 2005 when the exercise was done. So what it simply means is that fall of Naira, the weakening of the Naira has really eroded the capital base of the commercial bank. So like I said, this is well overdue. Whether it's for the checks or it's inspired by the economy, I think it's totally far from it, because the recapitalization is most needed as we speak. If you do your maths, the 500 billion that has been the current recapitalization, if you divide it by the current exchange rate of 1,500, you rather will have something less than what we had in 2004 the existing capitalization of the bank threshold. If you say 50 billion Naira, which is the current recapitalization for the international capital of the commercial bank, you divide it by, let's assume, the 150 or 140 it's where in 2013 to 2010. You find out that you had a much capital base in dollar terms for the banks than the current $500 billion. 500 billion. So that's why I say it has no relationship. You know, this government believes in these symbolic announcements and perhaps some shady propaganda, perhaps this is not totally the recapitalization is overdue because of the eroding nature of our Naira. It has eroded whatever the capital base of those commercial banks. Like I said, you can do your maths. 2011, 2013, exchange rate were around 170, 180. If you divide that against the 50 billion, you realize that you have much capital base in other banks than this very quest of 500 billion Naira in the current 1,500 or 1,400 exchange rate.
Steve, let me come in here. You did raise a very important issue here regarding the conversation around the devaluation of Naira. And that's what's leading to my next question, because we have seen the fluctuation in terms of the foreign exchange, in recent time, at least, if not since the wake of this administration. Are you saying that the banking recapitalization cannot help in the financial, stability. It can't help. Is that what you're saying? And if it can help, do you think that small businesses can benefit from such stability?
Pardon me, I didn't get part of your question.
Yes, I said you
aspect you are asking.
Yeah, I said you raised issue around. Yeah, you raised the issue around the devaluation of naira. And no doubt, the naira seemed to be struggling against the dollar in recent time. At least in the wake of this administration, we saw that, like you alluded to, given the value of the capitalization, what it was in 2005, 2011, till this particular moment. What I'm trying to say is, are you saying that the recapitalization cannot help to stabilize the Nigerian financial system? Is that what you're saying?
No. What I actually meant is that, like I said, it's well overdue. When I say well overdue, it means that it's needed.
It's needed, okay.
The recapitalization is needed. We need to see the stand and stability of our commercial banks or financial sector.
Okay.
I'm only just alluding to the fact that even the exercise itself, it's worth less than the value of the same commercial bank far back at 2010, 2011. As I'm pointing out, that even needed to be, lifted much higher than that, given the eroding nature or given the rate at which Naira has fallen, or the devaluation of the Naira. So it's much needed. We need some level of stability. We need some influx of money to have some level of capital base of our commercial bank. Like I said, the essence of the recapitalization is to give a large chance to the banks to make the bank more liquid so that they can lend to this sector and improve our credit GDP, which is currently around 14%, to somewhere maybe above 20%, so that the SMEs, smaller businesses and big businesses can have funds to operate optimally.
All right, Steve, we will take a break, but before we go, maybe I just prepare you for the break. Everything about capitalization or recapitalization has to do with shareholders and investors. Definitely their perception and sentiment must be dealt with. Okay, so but we'll take a break. When we come back from the break, I'm going to ask you what do you think investors will perceive as far as the two kinds of the offer before them is concerned at the moment. After the break, we build the conversation some more. Stay with us.
In a world of overwhelming voices where everyone has different opinion on different issues, it is important that we bring the core issue to the fore. Join me, Nancy Banigo, on Softline as we lend our voices to inform and influence your thoughts and actions. This is not just mere talk, it is an invocative program that touches the core of our existence.
No matter wetin I see, enough fit make mouth heavy to talk am. That's now why people dey talk.
You know wetin dey worry you, but you no go fit take help yourself.
In this kind of situation now, what if they really no talk to una? Wetin be the way forward?
They go bury our chairman on Thursday. We go remain here.
Make we talk good where we dey see good, and where we know say we no dey see good, make we also dey talk am.
No woman, no mother deserve to know the grave of his child.
The bank manager, the bank executive, they are the one the government should first pay.
People They Talk, the show on Monday to Friday by 5 p.m. on top ADBN TV.
1 hour of your daily dose of news from around the world.
Whether it's a diplomatic breakthrough, a humanitarian crisis, or a scientific discovery, Global Digest gives you a deeper understanding of the world around you. Join me, Alma Marcus. Let's stay ahead of the curve with conversations that are shaping our planet at 11 a.m. on DSTV, channel 258, and on Star Times, channel 140. Global Digest, your window to the world's current affairs, only on Advocate Broadcasting Network.
Welcome back. You're still on Market Movers on ADBN TV, your premium business show on television. And I'm still with Mr. Steve Wanchuku, our financial market analyst, and we are looking at the issue of bank recapitalization, talking about right issue and public offering. Mr. Steve, before we went on that break, I was trying to say, how do investors' perception of right issues versus public offering influence the success of bank recapitalization?
Okay. If we can just oppose it to the success of this very recapitalization, let's look at it from that point of view that, yes, in 2005, when this exercise was last done, I'm sure a boy that is born in 2005 and now is around 19 years, he's eligible to play in the economy. I think our eligibility age is 18 years here. So it means that, yes, there should be opportunity for every Nigerian to participate in whatever be the exercise that is being thrown to the public. So public offer should have been much better option so that Nigerians will have opportunity to be co-shareholders of these very existing businesses that are, turning out billions and millions of naira as income. So public offer will be that preferable to give Nigerians, those who also missed it in 2005 can also have opportunity to become a share of this commercial bank. Have in mind also that not giving away the fact that if you miss 2005, there is also opportunity for you in 2006, 2007, down till now, through the secondary market, when we have the primary market exercise. Now, the secondary market, which is the NGS, is there on daily basis. Before I move into this program, I am at the floor, trading at the floor of Nigerian Stock Exchange remotely. So, what it means that the market has been open for public to participate, to become owners of these very institutions. So, whether it is through public offer or through right issue, or through this market, the market remains open for investors and the Nigerian public to participate and own shares of any bank or any institution of their choice. Thank you.
All right. All of this has to do with the government. The government is the custodian of all of the policies as regarding the economy, especially this recapitalization we're talking about at the moment. In what ways can government policy, as it stands, support banks' recapitalization effort to ensure maximum benefit for small businesses? Steve, did you get that question?
No, apologies, I didn't get it.
Okay, I was trying to say that at the end of the day, the buck stops on the government's table. It administers most of its responsibility regarding the monetary policy through the Central Bank of Nigeria. I was saying that what role, what support do you think that government policy can give to banks in this recapitalization effort to ensure maximum benefit for small businesses?
That's a quite tough question. But what will government do? It can be beyond what they also to, like I said, the financial stability of the banks is the paramount. It should be paramount to the government and to us Nigerians. The safety of our funds in the hands of the commercial banks, the stability of the bank, it should be of a great concern to every Nigerian and the government at large. So whatever needed to be done needs to be done. So how will Nigerians participate? Like I said, it's an offer to the public. If you have the fund, if you have the will to participate, you participate. There is nothing basically government can do. Government cannot borrow you money to participate or buy shares of the commercial banks. So it's a question of for those already has the eligibility is the ability to have 1,000 or to have 5,000, depending share required to be purchased of each of these very commercial banks. So the eligibility is your ability to have the resources to participate in that very process. So, like I said, it's open for all, and every Nigerian can participate. What government possibly needed to do is the issuance of this recapitalization order or request to commercial banks to recapitalize. But the funding aspect of it is for those who has the way to do. Those are the ones that will be able to participate in it. But if you can take it backward, if you ask this question 6-8 months ago, one would have been government should have put in policies in place so that disposable income of Nigerians will be better, so that they can have some savings to actually participate. But unfortunately, Nigerians are battling to feed, Nigerians are battling to take care of their basic needs. That's the unfortunate aspect of it. Nigerians are retired, but definitely those who also have an extra will participate in this very process.
Okay, you advocated that a public offering might suffice at the moment so that it can give opportunity to people who did not participate in 2005 to at least to own a part in it at the moment. Do you think that a public offering could have an impact on the regulatory landscape for banks, and what are the implications for small businesses?
Like I said, public offer is an opportunity for investors to be co-owners of these very institutions. Yes, it gives opportunity to the young and those who perhaps who doesn't have the resources at maybe initial public offers of these companies to become co-owners. Like I also said, there is a 16 window as we speak, which is the secondary market. The Nigerian Stock Exchange is in existence. Like I said, I'm trading as I'm talking. So it's an open-ended market. You can become a shareholder. So if you miss in this exercise, there is the secondary market for you. Even when you have bought into this very exercise, the NGS is there for you to exist at will. So the secondary market is here, and I think the secondary market is the backbone of the entire exercise. It makes it an open-ended where you have an opportunity to get in now. The offer is going to close. I think in a couple of them, I think it's a maximum of two months for each of the offers of the, when you open it. Yes, you also have opportunity to extend it. But like I said, the secondary market is open for investors to actually participate in this very prospect. Beyond these very public offers can be time short, or the timeline is quite short.
Okay, I want to believe that you and I, to some extent, for our sentiment, because you did raise the issue of inclusive participation, so we are sort of agreeing on the show that public offer might be the right way to go. What are the risks associated with public offer? Are there possible risks for the banks and its impact on the economy in general?
Okay, what are the possible risks of public offer?
Yes.
Now, there may be possible risks on the side of the investors, which are the public, and there is also maybe on the side of the issuing houses, which is the commercial banks. But have in mind that the process are well thought, and documents are well submitted, and the checklists are there. So I'm sure the regulatory body must have weighed the offering price and also have weighed the prospectus of this very issuing house. So let's look at it, the risk on the side of the investor. Investor A is willing, and he doesn't know much about the bank, and is willing to offer and give him the money based on the prospectus of the banks they have issued and he has read and perhaps he believes he understands the business line of that very the issuer. So the risk stands that perhaps most often the expansion of the business lines, the issuer actually what he intended to use the money for may not be successful. But I don't think I should be dwelling on that aspect of it, because I know that every issuer, like bank issuing now, they know what they want to use the money for. So the risk is quite limited in the sense that these are guys who have been in business for more than 2 decades, 3 decades, so they know what actually they needed the money for and what they actually going to deploy the money and have the return on investment. So that's a possible risk on the investor, in the sense that you give money to the issuer and he's not able to manage the money and perhaps into issues or run into problems and can't be able to take the terms which is there in the prospectus for dividend payments, which is what a shareholder is expected to receive. Then on the side of the issue, the risk stands, if there is any, is maybe take for instance that the banks are now forced to have a recapitalization base of 500 billion, and your capacity to operate is less than that, and perhaps you went about raising this money from the public and you don't know how to manage this 500 billion, because like I said, the essence of investment is to have a return on
your investment. Yes.
And you took this money from the public and you weren't able to deploy them properly, and the capacity actually to utilize the money to have return on investment, which comes as dividend payment to these shareholders. So perhaps that may be the risk on the side of those who issue this very bond. But I think whatever be it, on both sides the risks are quite minimal. In this one, issuer is well experienced, he has been in the business, and he knows what he needed the money for. Thank you.
Interesting perspective you are bringing into the conversation, Mr. Steve Nwachukwu. But as we, try to wrap up on the show this afternoon, there is an aspect, of all of these that a lot of us might be concerned about. It has to do with this recapitalization exercise. Definitely is going to lead to increased capital for the banks. Now, the question of allocation, because you did raise a very pertinent issue earlier when you said definitely you talked about idle funds in the hands of investors, uncles, and all of that. All of this money will find their way into the banks at the moment. Now, once the banks are recapitalized, how do you think that allocation of that capital, either through the right issues or the public offering, how can it be allocated to support small businesses in Nigeria?
Okay, have in mind that the commercial banks, their primary functions is to receive deposits and lend it to critical sectors. And the government, through the fiscal policies, can draw up programs that can actually channel these funds to the appropriate areas that government needed money to be put in. Through the national planning, the Ministry of National Planning, and Ministry of some other relevant agencies and ministries of government. Yes, the essence of this existence of CBN is to galvanize these very funds and channel it to the area. So beyond the interventionist agencies of governments like the Bank of Agriculture, the Bank of Industry, and other interventionist agencies, monies are meant to be channeled to the critical and where it is well needed. But unfortunately, we have witnessed a regime of our commercial banks who perhaps don't have that desire to lend to the real sector, the SMEs. Those individuals who actually have beautiful ideas but cannot meet the criteria, or most of their ideas are given the fact, perhaps the risk nature of their proposal or their business ventures. The banks cannot extend money to them. This can be, if perhaps government can use policies of government to whittle it down, reduce those very criteria or the prerequisites or those collateral requirements that is needed for such SMEs, for such entrepreneurs to access. Greater harm will be to the economy beyond the harm or the liquidity crunch that will happen during this exercise. The greater harm will be after this exercise has been concluded. Entrepreneurs and small and medium businesses will be banned and they keep asking for their mother's head as well. That would be the greatest damage to the economy. If you must have wiped away, you have taken away all these very idle funds that exist or in the hands of our uncles, our friends, our family members, our development unions. They must have invested through shares to the banks, and this money has been channeled. Remember I said that the essence of the CBN is to galvanize money and channel it through this policy of recapitalization, channeling money now. So if you must have through this exercise taken away this money that is in the hands of our cousins, our friends, our brothers, our sisters, our development unions, and they move this money through these IPOs or public offers and right issues to the banks. And we did go to and keep asking for our mother's head as collateral. That will be the greatest damage to the economy.
Yeah.
Thank you.
All right. Mr. Steve, when you said our mother's head for collateral, I was just laughing here. But that's actually the experience of small businesses.
Unfortunately, that's how some of these very ridiculous demands and prerequisites to access these funds with the commercial banks.
Yes.
They will see lofty ideas, beautiful concepts, beautiful proposals, and they will keep asking for collateral for a young man who just left school. Where is he going to get collateral? It's the equivalent of asking their mother's head.
Mr. Singh, now that you raise that issue, is it intentional, to deny, like you said, a young graduate opportunity to be an entrepreneur?
Oh, that's why I say the government, through the Ministry of Planning, are not prioritizing their policies and programs. Like I said, the central bank exists through the Ministry of Finance and National Planning to channel these deposits that they've received to the critical areas that needed it. That's why, that's why there are interventionist agencies like Bank of Agriculture. Those entrepreneurs, if they cannot get into the commercial banks, government can run a program through the Bank of Agriculture for those of them into agriculture to access money through the Bank of Agriculture in a very low conditions.
All right.
Through the Bank of Industry, they can also access money.
Mr. Steve, I know if I allow you, we are going to be going on and on because it's an area you are quite passionate about. Let me just leave you to continue your remote trading there. Like you said earlier, it's always a delight to speak with you on Market Movers. All right, thank you for your time on the show. All right, that's our offering on the show this afternoon. Market Movers makes a return tomorrow. I am Sonny Onaji Effiong. Bye-bye for now.
ADBN, Advocate Broadcasting Network.